Start of this segment in Kenya as the President Uhuru Kenyatta has renewed Central Bank Governor Patrick Njoroge's term. Mr. Njoroge was first appointed to his post in June 2015 for a 4-year term, which is renewable once. Njoroge is a U.S.-educated economist and worked as an advisor at the International Monetary Fund before becoming governor in 2015. During his first term, the government introduced a cap on commercial lending rates in 2016, as well as moratorium on the issuance of new commercial bank licenses in 2015. At the time, the temporary closure of Chase Bank Kenya, which followed the closure of Imperial Bank, another mid-sized lender, and Dubai Bank Kenya, a smaller lender, had dented confidence in the industry, which has also seen a jump in bad debts. Just this week, Mr. Njoroge announced plans to withdraw an old version of its 1,000 shilling banknote to tackle illicit financial flows and counterfeiting. And the International Monetary Fund projects that Namibia's economy will mildly contract again in 2019 due to poor rains and reduced diamond production, but economic growth will return in 2020. Namibia's central bank has said in April economic growth will be about 0.3% in 2019 after contractions in 2018 and 2017. The IMF says that the downside risks to this outlook include lower than expected Southern African Customs Union revenue and fiscal slippages that would undermine the government's efforts to stabilize public debt dynamics. Namibia's growth is expected to gradually converge to a long-term rate of about 3%. And the race to mine Guinea's iron ore has started, although the focus is not on its giant Simandou deposits, but on smaller finds whose output could be transported via Liberia if ArcelorMittal shares its railway. Guinea's aspiration to develop Simandou, the world's largest known untapped iron ore deposit, have foundered because of the cost of infrastructure and protracted illegal disputes. Guinea says it is still trying to reach a deal with China to build the roughly 650 kilometers of railway needed to transport the iron ore through Guinea. And on domestic commodities, seeing beef consumption in Nigeria amounts to about 380,000 tons and is projected to grow up to 1.3 million tons by 2050. According to FAO statistics, there are 19.5 million heads of livestock in Nigeria with a production of about 380,000 metric tons of meat per year. Now, an interesting part of a cow is the leg, which we popularly call or known as cow leg. It's a delicacy that is widely consumed by many in Nigeria in spite of its high cholesterol content. Interestingly, the price of this part of cow has spiked by 25%, even though normal beef has been flat. Well, let's bring in Tobiloba Ogunolu, one of the research analysts with financial derivatives, to break down the seemingly anomaly there. Hello, Toby. Thank you for joining us. Good afternoon.
Thank you for having me.
Now, over time, we have seen the price of cow leg spike. However, beef itself has been flat. This is an anomaly, isn't it? And what is responsible for this?
Okay, so like you rightly said, cow leg is a delicacy, and it is mostly consumed by the elite. So it's also consumed in form of nkobi, which is cow leg, peppered cow leg. And apart from the fact that it is consumed in household, it is also made in restaurants and bars where you can have it with a bottle of your favorite drink. So the increase in price is due to the fact that it is a delicacy. So an increase in the price of this commodity does not affect the demand. So that means that the demand for this commodity is inelastic. So the fact that it's a delicacy, the demand is really high and the price is high, and also the price, even if the price of the commodity increases or decreases, the demand is still there. So the increase in price is due to the demand.
Okay. Now, bone crushing is a major sideline for the cow leg business. What is the potential of this in Nigeria, and how can the cattle rearers or the abattoirs cash in on this major part of the value chain?
Okay, so mostly bone crushing means the use of a machine to crush animal bones. So that is after it has been cleaned, it has been boiled in hot water, and also dried for many months. So after this bone is dried and crushed, it is used for different purposes. So for example, it is used as a fertilizer supplement. It is used in the animal feed industry and is also used in the pharmaceutical industry due to its high calcium content. So the fact that this has high calcium content, pharmaceutical industry and also animal feed industry can use this commodity. So the fact that pharmaceutical industry and animal feed industry in Nigeria are not really sophisticated. We've not seen like a boost in the demand for this commodity. But as this industry continues to grow, we expect the demand for this commodity to increase.
All right. Thank you for your time, Toby Loba. Toby Loba is one of the research analysts with Financial Derivatives Company. While the main index of the Nigerian Stock Exchange looks set for a negative return from the Eid holiday, as the all-share index was down over 2% at intraday. Let's cross over now to the exchange, where my colleague there, Temple, would of course bring us up to speed with the developments there. Good afternoon, Temple. So the index lost heavily at intraday, and that's the first trading day after the holiday. Why that heavy loss on the first trading day?
I think a lot of investors are still trying to rejig their positions in the market, and they're trying to sell down. If you look at Dangote Cement, which has constituted a greater part of the portion of sales today, you realize that it's down by some 9.91% or thereabout, almost 10%. It tells you that this company, which is actually paying out a dividend of 16 naira, given the announcement that was made to the market on Monday, is actually having an impact in the market, because again, these investors that are selling down on Dangote right now are investors whose name have actually appeared on the register of the company up until 3rd of June, as the demand or the dividend payment requirements, stipulated. So it contributes more. This particularly contributes more to the level of trends that we have in the market. Another development we're having right now in the market is the fact that Union Bank is looking to have an EGM, an extraordinary EGM, scheduled for 11th of June. That's next week Tuesday, to be able to carry out some kind of share capital premium reduction in its company. It's some 54 billion naira worth of transaction will be shaved off the company's premium capital there, because again, these are transactions that have been deemed as accumulated permanent losses. What's that amount, from legacy transactions, which has also contributed to some 247 billion naira that was approved by shareholders in 2017. So you put all of this together, it tells you that a lot of investors are trying to rebalance portfolio, look at how things will pan out eventually next year, because again, some traders are really yet to resume here in the market. Chimizi.
All right, Temple, thank you for that update. And finally on the program, Simba Stillwater says around 3,450 jobs will be affected by the proposed restructuring of the company's gold mining operations following losses at some of its mines last year. The number of jobs losses is lower than the February forecast for around 5,870 employees and 800 contractors to be affected. The precious metal miner said it had concluded talks with stakeholders on restructuring its gold operations following financial losses at the Beatrix 1 and Dreyfus 2678 shafts during 2018, with only 3,450 jobs now affected. That's a wrap on the program. Thank you for watching. I'm Chimizi Obi Iwabo.